The Fed just made its decision, and Kevin Warsh may have changed what investors think comes next. Stocks, Bitcoin, and the dollar are all reacting. Here's what you need to know. The Federal Reserve kept the federal funds rate unchanged at 3.50%, 3.75%. That part was expected. But the real story came during Fed Chair Kevin Warsh's press conference, where his tone reinforced that inflation remains the Fed's top priority. Warsh opened by reaffirming the Fed's unwavering commitment to its 2% inflation target, saying there is no soft inflation target and emphasizing that restoring price stability remains the central bank's mission. He also defended avoiding forward guidance, arguing that in today's uncertain environment, it's more prudent not to signal future policy moves in advance. At the same time, he described the U.S. economy as showing impressive resilience. The overall message leaned hawkish signals, strong emphasis on the 2% inflation goal, no promise of future rate cuts, continued reluctance to provide forward guidance, confidence that the economy remains resilient. Dovish signals. The Fed did not raise rates today. Warsh avoided committing to another hike and stressed that future decisions remain data-dependent rather than pre-announced. Here's what's confirmed. The Fed held rates. Warsh reinforced the inflation fight. No explicit signal that rate cuts are coming soon. What remains market expectation, not Fed guidance. Traders are reassessing the chances of another hike versus an extended pause as future inflation and labor market data arrive. Nasdaq, S&P 500. Cautious, with higher rate expectations weighing on growth stocks. Bitcoin crypto, sensitive to higher real yields and a stronger dollar. Treasury yields. Upward pressure if markets price a more hawkish Fed. US dollar, supported by the Fed's inflation-focused stance. Gold faces headwinds from higher yields and a firmer dollar. This meeting didn't deliver a rate cut, but it delivered a clear message. The inflation fight isn't over. The next inflation and jobs reports could decide whether the Fed stays on hold or tightens again. Subscribe to MarketPulse 360 for the fastest verified market updates.